Hey folks, I am Becky with Enduring Finances. Welcome to my channel. Today we are taking a look at the entire breakdown of my stock portfolio. This is self-managed, self-directed through Ally. I've worked with them for a few years now. And this is the third or fourth time that I'm breaking down every single different company and all the shares of stock and all of the data on my massive spreadsheet for you guys. I've touched on a lot on my goals as far as this portfolio and what I want to accomplish in the long term and within this next year, 2025. I made a whole video where I broke down my personal goals, my financial goals, and all that. Feel free to check it out. But essentially, my goal for this portfolio is to one day be large enough to function and return about $2,000 a month on average in dividend return, based off of where my strategic breakdown is with the different sectors. That would be about $600,000 in the portfolio, earning about 4% every single month in dividend yield. So we're a long ways off from that, because for right now, my portfolio is valued at $39,941, and this is at the end of December 31st, 2024, going into January 1st, 2025. The goals that I wanted to accomplish in 2024 was to reach $34,000 value in the portfolio, which I did. I did not earn $1,400 in dividends or reach any of the averages that I wanted to as far as the dividend yield. But that's okay. Big thing that's really helped me know what I'm how I'm reinvesting money, where I'm sending my money, which companies that I'm going to be investing in with the dividends that I get, is my breakdown. And you can see on this handy dandy spreadsheet here, right here, that we've got it set up here. We got the different sectors plus bonds and ETFs, which is one that I added in for my personal portfolio here. We have their current value based on the end of year data here. The target percentage of what I would like my portfolio to be balanced on. That's 25 for finance, 15 for tech, 15 for real estate, 15 for consumer staples, 10% for utilities, 5% for healthcare and energy, 3% for telecommunications, 2% for bonds and ETFs, 2% for industrials, 2% for consumer discretionary, and then 1% for materials. And these numbers here, the target numbers, are based off of the percentage, but they adjust based on the total value of my portfolio. And this spreadsheet that I have set up here pulls data from the stock market directly, and so it's constantly updating these numbers throughout the day and every time I go into the spreadsheet, and it tracks that on the back end and pulls that information and keeps this really, really, really well thought out and up to date with that. We can see what the actual percentage of my portfolio is with each one of these sectors here, and what we're trying to reevaluate and readjust with those here. But this is how I know where I'm going to be focusing in each individual sector to reinvest money. I have it kind of broken down visually as well. This is what it actually is as far as the different sectors here and the colors. And this one is actually what I would like it to look like. So tech would be a little bit lower than what it is, but you know, it is what it is. It is a rolling number. I think doing monthly dividend updates is very helpful for me. It allows me to not only make sure that I'm staying up to date and track with my information, but I get to give that to you on a monthly basis. We've been tracking my average daily dividend earnings from, quite a while now. We start out the year, January 2024, at $3.48 a day on average dividend earnings, and we increased that all the way to $3.55 a day on average dividend earnings from this portfolio, which is about $108.04 a month, which is phenomenal in my opinion. The dividend yield when we ended it was 3.25% overall, and that's per month. So that's per month, not year, not annually. But we did increase the value of the portfolio from $33,000 to just under $33,950 for an overall increase of 19.32%, and that is with me pulling out money to reinvest into my real estate. So we saw a gain of $6,850 total. And I know some people are going to be like, well, the S&P did 25% this last year. You're right, the S&P did do 25%. But the focus of my portfolio here is not market value increases total. It is the dividend yield, and that is my baby in it. And I know that I could be making more money investing differently right now, but my goal is that dividend income in the future, not the market value increases. And that's just the goal that I have for this portfolio. So overall, we did fantastic. Increase the entire year up. I'm very happy to see that come through. We had some high months, we had some low months. We broke $40,000 in November and then lost it in December, but overall pretty happy with that. Dividends return this year was really, really fantastic. $1,235.77 in total dividends this year earned, which is phenomenal. Because my focus is so heavily on dividend return and not so much market value increases, I wanted to show you my highest 10 dividend earning companies in my portfolio. The first one is to be ticker symbol NLY. We have 50 shares of this, average price $18.30 a share, total value $915. The dividend for each share is 65 cents, which means for all the shares that I own, I earned $32.50 a quarter off of this. Ticker symbol OHI is number 2. We have 26 shares, total value $984.23, earning 67 cents a share, coming in at $17.42 in earnings each quarter for that. Ticker symbol RITM. We have 66 shares of that, total value $714.45, earning 25 cents a share, coming in at $16.50 in dividend return. Ticker symbol T. We own 39 shares, total value $888.03. Dividend is 28 cents a share, bringing that to $10.82 every single quarter. Sixth is going to be ticker symbol SO, Southern Company. We have 15 shares valued at $1,234.80. We earned 72 cents a share, making it $10.80 in dividend return each quarter. Next one is ticker symbol AVGO. We have 18 shares valued at $4,173.12. We earned 59 cents a share, bringing that dividend return to $10.62. Number 8 is ticker symbol NYMT. We have 50 shares valued at $300. We earned 20 cents a share, meaning we're taking $10 a quarter off of this. And this used to be way higher. They've cut their dividends in half and drastically, and it's just what it is. My numbers are off on these, so pardon on that. Next one, ticker symbol PM. We have 7 shares valued at $842.45, pays $1.35 a share, and we're seeing a return of $9.45 for this. Next one is JP Morgan. We have 7 shares valued at $1,677.97. We paid $1.25 for each share, meaning we're bringing in $8.75 for all of those 7 shares. And then the 10th highest dividend earner that I have is ticker symbol BAC. We have 31 shares valued at $1,363.06. We earned 26 cents a share, meaning we are bringing home $8.06 for all of those 31 shares. Very happy with these numbers here. Since I am so focused on dividend value and increasing the dividend yield, most of the companies that I'm investing in are going to be companies that are giving dividends. So let's go ahead and see all of the shares that I purchased and sold off this last year, because I have it racked right here. All right, so real estate is one of the highest paying companies, sectors in my portfolio. So we reinvested very heavily in real estate, and real estate has been down as far as market value for the last couple of years. So we've been investing a lot to kind of bring that up and keep that balance in the portfolio. There really only is just real estate, and then all the other ones have bits and pieces added in. Total for all of them, 65 shares, And this is just from the shares that I bought, not the shares that were sold or lost. Those, we won't include this, but we bought 65 shares of stock. Real estate, we focused heavily on NLY, ticker symbol O, and RITM. We did sell off 50 shares of ticker symbol NYMT in April, just because their company has not been performing well, and I had a large quantity of them, and I kind of wanted to rebalance that. And their share price has dropped over $1.20 since I sold this, so I made the right choice, and I might sell more. But just really bouncing back and forth between NLY, O, and RITM, and then at the very end, NLY, RITM, NLY, RITM. And I'll show you when we get into individual sectors kind of how that looks as far as the breakdown for each one of the companies within those sectors. Telecommunication, we bought 12 shares of Siri between January and March. Tech, we sold Apple and AVGO. This was mainly to reinvest that money into my rental property, which is now up and running, as well as industrials. We sold Boeing. We had one share. This was easier to sell because it doesn't earn a dividend, and I was already going, why do I have this in my portfolio? It's not returning a dividend. So we sold that one in August as well. Materials, we bought one share of ticker symbol EMN, and we bought one share of Pfizer in October. And then utilities, we invested in ticker symbol D. We bought one share of that in February. So these are all of the different shares that I purchased throughout this year and each month. If you go and look at my monthly dividend breakdown, it'll show you exactly how much money was spent on these and all the little bit more details on that. But overall, it was pretty fantastic. There was a couple changes in my portfolio this year that were outside of my control. One of the biggest ones there, well, really the only one that happened this year, was Westrock, ticker symbol WRK, joined forces with Smurfit Westrock. I might not be saying that right, but that is ticker symbol SW. And essentially all of my shares from WRK transitioned into SW. I was given $15 extra because I didn't move over correctly, and I was essentially grandfathered into 3 shares, which I did not want because they do not return dividends. It's a brand new company. I don't really want to invest in it at this point. So I sold all 3 of those shares for $47.88 a piece. And then, of course, we kind of already talked about selling different shares of Boeing, Apple, and Broadband, just to kind of help out with investments there. In total for 2024, I ended up withdrawing $1,109.69 from my portfolio, and so that money could have increased the gain on my portfolio as well, because that money was not reinvested into companies that produce dividends. So I saw a decrease in dividend earnings, I saw a decrease in market value, and I sold shares, so market value got hit a couple more times there. So even though my portfolio did not perform as well as S&P 500, I'm still very happy with 19+% on that. But let's go ahead and take a look at the breakdown of the individual sectors within my stock portfolio, because this is kind of where it gets a little bit interesting. We'll start looking at the overview again. So we know on the overview page we have all the different sectors here, and I have all the individual dividends combined each month. And so we can see that real estate is my highest dividend earner, coming in at 33% of my total dividends. Finance is at 25%, and then the rest kind of filter down from there. But I can see how much total dividends earnings I'm getting from each one of these sectors, and then by month, so that I can track that and kind of see where I'm coming as potential returns and potential dividend income. But enough of that, let's jump into the finance sector, which is the first sector that I have as far as my portfolio goes. Biggest company right now, I think, is ticker symbol BAC. Each one of my sectors within my portfolio has its own target breakdown and then the actual breakdown. And so this is based off of how I've evaluated the companies that are on this list here. Some of them I have not invested in yet. Some of them I'm kind of like, maybe I will in the future. We keep evaluating this as we go along. But we can see BAC, UNH, AXP, USB, JP Morgan, BK, RY, TD, KEY, and TRV, and then BNS and EFC are all companies in my portfolio that are earning money right now. They have different weights down here and full percentage weight here, and then it breaks down further, and we can see the dividends that are coming in from each one of these that make up each month in total. And we can see the EFC is my monthly dividend earner from finance. We can see how much total value is, how much is allotted, the total portfolio breakdown, different prices, shares, the value, all of those things are right here. Moving right along. So this is my finance sector of my portfolio, all these different companies and the weights that they have, the percentages that I have broken down. Let's go ahead and take a look at tech. Tech is a little bit smaller because there's only a few companies that are really, piquing my interest, and these are not so high on the dividend payouts here. Of course, we have Apple, one of the biggest companies in my portfolio, ticker symbol V, AVGO, the biggest company in my portfolio right now. No, it's not. I lied. That's not the right one. And then CSCO and MSFT are all in my portfolio, trying to stay within these target goals. Of course, we haven't invested in these two yet because we've been investing so much in real estate and other sectors. Target 35, 15, 15, and then 5% reflectively there, and then all of the dividends from those. Moving on to real estate, this essentially, I need to adjust this a little bit, but New York Market Trust was one of the biggest companies that I wanted to focus on. That has changed, and it is, my goal is to have it about 5% of my portfolio. It's at 6% of this sector right here. 19.4% is ticker symbol OHI. NLY is coming in next at 18.1%, and then RATM at 14.1%. Each one of these earns dividends down here, and we can see that here coming in $82 every quarter, which is phenomenal. But this is my real estate sector. As far as consumer staples, again, we're seeing, Costco is very heavy in this right now. 48.3% of this entire sector is Costco, which is really, really high. So we'll be investing in different companies to kind of balance that out. Costco is very, very, very expensive as far as price. So when I buy one share, it really impacts the overall portfolio just because it is $916 a share. But ticker symbol KO, GIS, PM, KHC, MDLZ, and FLO are all current companies in my portfolio, and their target and actual breakdowns are here, as well as shares and value. Feel free to screenshot this, save this, whatever you need to do. I will also have an entire breakdown PDF of all the shares that are in my portfolio total. Moving on to utilities. It gets even smaller with utilities. There's only a few good companies out there that I like. Coming in with the biggest one is ticker symbol SO at 34.5%, way above what I want for my target. But I absolutely love this company here. We have 15 shares of it, valued at over $1,200. Next one is ticker symbol CNP, PPL, NEE, D, and DUK. All of these are in my portfolio right now, trying to maintain this, and this one is pretty well balanced besides ticker symbol SO having a larger majority of it, but not too shabby with that. Moving on to healthcare. We have, again, the biggest one in my portfolio is AMGN, which is a huge company in my portfolio right now. No, it's not. Biggest share we have is ticker symbol AMGM. This is because this stock company is priced at $260, and the majority of these are a lot less than that. So this will even out as we invest more. These are a lot of higher stock prices, so it takes a longer time for me to build up the money in my portfolio to be able to invest in one share. But we are seeing that even out pretty well over time. I'm very happy with that. Moving on to energy, we have ticker symbol SU, PSX, ENB, OKE, KMI, and CVX. All of these make up my energy sector in my portfolio. We're doing okay with the balance down here. 28% of this is SU, and then 26% is OKE. And we can see the dividends down here. Not a lot of dividends coming in at the tail end of my portfolio, hence why we're focused so much more on finance and real estate and consumer staples. Moving on to telecommunications. We have 3 down here. 2 of them are in my stock portfolio right now. It is very outweighed with ticker symbol T, coming in at 97.5% of my entire telecommunications sector, which, it's small within it. I mean, it's like $1,000, but of that, primarily it's all ticker symbol T. And we have Siri. They did a stock change, so we lost some shares to gain 1 share because they did that earlier this year, and a tiny payout for that. Ticker symbol T has a bigger payout, which is why it's got more percentage overall as far as dividend yield there. But this is the telecommunications sector. Let's look at bonds and ETFs, which is also small. We have 2 different bonds and ETFs in my stock portfolio right now. Ticker symbol BNDX and TROW. Both of these are very at a low, but coming in pretty well with small amount of dividends. BNDX comes in every single month. They vary on their dividends, so it could be 18 cents, could be 19 cents, but they've been typically doing a December drop of like $3 and some change there, so that's a big input there. But overall, this is what we're looking at: 30.3% BNDX, 69.7% of this sector is TROW. Moving on to industrials, we only have 2 stocks in this company that are actually, 2 stocks in the sector that are active in my portfolio, and that is going to be ticker symbol CMI and LMT. Both of these pay out quarterly and are down at a loss, which I haven't invested in this sector a lot because it's doing okay. It's holding the weight of the sector, and I haven't invested in anything else within it yet. So future state, this will get a little bit bigger and a little bit more fluffed up, but that's where we're at. Consumer discretionary. Now these are more when the economy is going very well and people are getting stuff that they might necessarily not need. So it's a discretionary. It's not something they have to have to survive, but it's like a fluff. So this is why it's lower on my portfolio, because it's more of a risky sector as far as putting money in, because this will drop down when the economy drops down. So that's where we're at. We have 3 shares in this sector. We have ticker symbol QSR, ticker symbol HD, and ticker symbol DIN. 1 is lost, 1 is up 100, and 1 is about staying same. But between the 3 of them, 67% ticker symbol HD, which is Home Depot, which is up. 10% is DIN, and 22.49% is QSR. And we're seeing small dividends coming from that. Moving to my last sector, which is materials, which makes up a whopping like 1 or 2% of my entire portfolio. We have 2 companies that we look at in this, ticker symbol EMN and ticker symbol LYB. And we are holding about even with this. We're seeing a dividend payout of dollars for these shares here. 71% is EMN, 28.9% is ticker symbol LYB. But those are the different sectors. Let's go ahead and take a look at the top biggest companies inside my portfolio that I have right now. And here they are. We have top 1, AVGO, which is Broadcom Incorporated, 18 shares. Total market value, $4,173.12, makes up 10.45% of my entire portfolio. Second one is ticker symbol AAPL, which is Apple, which used to be my biggest one. We have 15 shares valued at $3,756.30, coming in at 9.4% of my entire portfolio. Third one is Costco, staying up there with the third. We have 3 shares valued at $2,748.81, making up 6.88% of my entire portfolio. Next is AXP, 7 shares, 5.2% of my portfolio. JP Morgan, 7 shares, coming at 4.2% of my portfolio. UNH coming at 3.8%. BAC coming at 3.41%. Southern Company coming in at 3.09, OHI coming in at 2.46, and then Visa coming in at 2.37%. And I did an entire breakdown of all the individual shares in my stock portfolio. I'll show you real quick here. All right. So this is the PDF that is on my website. You can download it. There's no viruses or anything like that. That is not my goal. But it breaks down all of these companies directly on this PDF that you can see. You can see the value, the cash on hand, the percentage on each one, how we're doing, how many shares. If you want to go ahead and download this, take a look, screenshot it, whatever works on that. But this is the ginormous list with all of the companies here. We're seeing a lot of 0.6%, 0.5%, but based off of that breakdown, the average company in my portfolio is going to be valued about 1.59% of my entire portfolio. The big ones are going to sway that a little bit because we got little guys, but anything that is above 1.59% is a bigger fish in my portfolio. But this is going to wrap up the broad overview of my self-managed, self-directed stock portfolio. I shared you each different sector on a very brief scale because no one wants to hear me say everything. I showed you each individual stock. There's a list you can download, you can screenshot it, you can look at each one of these shares of stock that I own, the price, the average price, the market value, all that stuff. Alright folks, to wrap this up, I want to make this very well known. I'm not telling you to invest in this strategic way just because I'm doing it. There are different ways to invest your money. There's different funds, ETFs, mutual funds, target date funds, managed by someone else completely. You can hire somebody and they can take your finances and invest them there. This is just the way that I'm doing it with this specific portfolio. I have 2 additional retirement accounts that are target date funds. They're managed through a third-party service. They're going off of when I'm estimated to retire and when I can pull out, tax benefited income. And they are managed by somebody else completely. So this is not my only investment account. This is one that I focus heavily on dividends because I love dividend income. It's something that I want to use in my future for potentially early retirement before I can dip into my actual retirement accounts. And the big reason of that is last year, 60% of the dividends earned, so the $1,000 plus that I earned in dividends, was qualified dividends, and I didn't owe taxes on them based on a couple other things. So, $600 of income that I didn't have to pay taxes on is probably going to be about the same this year. So more than $600 in income tax-free just by me managing it myself. I'm not paying hardly any fees. And the idea is to have this as an early retirement system when I'm earning potentially $2,000 a month, and 60% of that is tax-free and 40% is taxed at a lower rate than a traditional job or self-employment would be. So that's why I'm investing the way that I am and trying to keep it within a healthy risk management ratio, not too risky, not unrisky, still seeing that market value increase. We saw that drastically this year, but focusing primarily on that dividend yield of 4% a month, getting me towards that $2,000 a month in dividend income, where the majority of it is tax-free. So I'm going to lose my voice. If you're new to investing, I'm going to do eventually a breakdown of how to start investing. If I were coming in day one and didn't want to do all of the individual dividend stuff that I'm doing, I would focus on ETFs and mutual funds. Look for low fees and good returns and set it in there and leave it. Let it sit for years and years and years and years and years. But that's my 2 cents. I'll dive more into that future state when I actually get to those videos and talk about different sectors and everything. But I'm going to leave this here, folks. Hopefully you guys had a fantastic return in your investment accounts, whether it's self-directed or managed through third party or somebody else. Hopefully you saw a ginormous increase in your market value. S&P was 25%. I'm over 19%. Hopefully you're somewhere, on the closer end of 25 if that's what you want. And hopefully 2025 will be a fantastic year for all of us as well. And I will see you next time, folks. Bye.